Hey, hello, welcome everyone. Welcome to a supervisory update, getting your AML CFT audit on track, presented by Waystone Compliance Solutions in Singapore. So I'm Tomio Tan, Executive Director of Waystone Compliance Solutions. So I'm here to share this webinar with you. So to start off with, so we have an outline so you can see these are the key points that I'm going to cover in today's webinar. So we start off with overview of the AML CFT legal framework in Singapore. Now, AML obviously has been a hot topic in recent months, maybe not even months, like since 12 months ago, right? So we also have some of these recent developments as well as enforcement actions that the regulator MAS has taken. Aside from the legal framework developments, we'll also go through an overview of the CDD process, the customer due diligence process, and how this governance structure of AML should be structured, right, in terms of the three lines of defense. And then following which, we have an update on two specific publications by the MAS. One circular on audit of AML policies, procedures, and control, as well as the recent information paper. And last but not least, we also want to spend some time just to talk about some of the areas, right, in which Waystone has expertise in where AML is concerned. So, but without further ado, that is the outline, and we will start off with the AML CFT framework. Now, I mean, to begin with, we have always been focused on AML CFT from a financial institution's perspective. I mean, most of us in this call, in this webinar, we are probably working for a financial institution, right? So the focus has seems to be always be on financial institutions, right? The regulatory body is monetary, obviously it's MAS, Monetary Authority of Singapore, and the main legislation since a year ago, Financial Services and Markets Act. Now, where Singapore is concerned, there's actually a lot of non-financial institution type of like service providers per se, where AML is also of a concern. So over here we have an overview. Like for example, we have accountants, right, regulated by ACRA. We have corporate service providers regulated by ACRA. We also have others, casinos, money lenders, precious stone and precious metal dealers, basically your jewelry shop, pawn shops, the legal profession where, conveyancing work, where clients hand over money, so to complete deals, to be held on trust. So lawyers are also basically required to comply with the AML CFT framework. Last but not least, anything related to real estate developers as well as their real estate agents, right? Because money can be used to purchase assets, right? And a very popular type of asset is property in Singapore. So I mean, as an overview, not the only key AML regulations don't only concern financial institutions. There are also these other types of service providers which are at risk, right, when it comes to AML. So recently, I wouldn't want to say that there has been more updates or more recent developments from the MAS in response to the money laundering scandal that was reported in the news in August 2023. Most of the perpetrators, right, have been sentenced or deported from Singapore. So in the past year or so, there has been a flurry of activity where AML is concerned because Singapore is we are a member of the FATF, right? So we have to maintain certain standards where AML is concerned, and to make sure that we are able to regain confidence amongst investors. So you tend to see a lot of activity in the past year or so. Right, we start in April 2024, where there were updates to AML notices concerning payment service providers. I mean, payment service providers indeed is a key risk area, as stated in our money laundering, risk assessment reports. In April 2024 as well, we have official launch of Cosmic. Cosmic was announced some time ago, right? It's basically a platform for the six major banks in Singapore, the likes of DBS, OCBC, UOB, to come together to share data concerning high-risk clients or suspicious transactions. So this basically platform has to start somewhere. So it starts with the six major banks. It might be extended to other types of financial institutions in the future, right? Who knows? Then we look at in May, June, Singapore released national risk assessment reports in the areas of money laundering, terrorism financing, environmental risks, related risk assessments, where we highlighted uh, what are the most at risk types of financial institutions generally and non-financial institutions. Like for example, payments has been identified as a key area because payment has been developing very quickly in the past couple of years since the Payment Services Act was enacted. Right? You also have other types of financial institutions, banks. You also have different type of structures, like say trust, a trust company. So all these are contained in the risk assessment report. And as a financial institution, we need to incorporate the findings of these assessment reports in our EWRA updates. All right. Then following that, July 2024, circular on establishing source of wealth targeted primarily at wealth managers, but nonetheless, the findings or the good practice recommendations are still relevant for most other financial institutions, right? In particular, say fund management companies, right? So it deals with what are the best practices to when it comes to trying to verify source of wealth for clients, particularly higher risk ones, right? So those recommendations are worth looking at. Right? In October 2024, we have the Inter-Ministerial Committee report. So this is a collaboration between like Ministry of Finance, Ministry of Home Affairs, and the MAS on improving AML governance and structure across the whole of Singapore, so it doesn't just focus on FIs. It also focus on non-FIs like the lawyers, property, precious metals dealers, etc. So again, a whole set of recommendations in that report. So again, in October, we have the circular on AML audits, which we're going to spend more time talking about, as well as the information paper on AML best practices. So this concerns MAS's stance on, the fact that they are requiring or emphasizing that FIs should be looking to conduct independent AML audits as well as to maintain certain best practices, right, in order to make sure that they can mitigate any ML or TF risks. So these are the recent developments. So there's a lot of focus on AML, right? Unsurprisingly. So just maybe an update on key enforcement actions. So these two enforcement actions, they concern fund management companies. Recently, on the 29th October of 2024, the MAS imposed a competition penalty of 1.9 million Singapore dollars to Atrium Asia Investment Management, and the CEO was also reprimanded. Back in May, a couple of months back in May, a competition penalty of 2.5 million was imposed on Swiss Asia Financial Services. Again, CEO and COO were reprimanded. So it's I think when the news of this competition penalty for Swiss Asia was released in May 2024, it was kind of like unprecedented in the sense that this was the first time in the longest while that there was such a significant fine imposed on a fund management company. Last year, even for say DBS was given a fine of what 2.6 million. So, I mean, in comparison, it's really a significant sum for in the fund management industry, right? So, what were the breaches that were noted or discovered by the MAS through their investigation? In general, inadequate CDD measures, right? Failure to scrutinize suspicious transactions which may have been complex or unusual. Failure to properly identify source of wealth, right? So this is things like maybe high risk client, where do their entire body of wealth originate from, how are they getting the money to invest, etc. And inadequate documentation of the CDD process. And one particular key point mentioned by the MAS is like, for example, in the case of Swiss Asia, is that there was no audit of the AML process carried out for a number of years. So the AML process was not subjected to any independent review or say internal audit. So that was one of the highlights of that particular enforcement action. I think once again it's just to demonstrate that the MAS is focused, emphasizing that the need to have proper controls and of course proper independent reviews. Okay, so just a bit of a refresher, like what does the CDD process entail when an FI is looking to onboard a client, right? So you always start with an initial client identification process to understand the client's structure, like shareholding structure, legal entities. If you are talking about an entity, who are the beneficial owners, directors, connected persons, authorized signatories. Right? In short, understand who we are dealing with, and then verify that through a verification process, obtaining certain documentation to prove that the company was incorporated, prove that this is an individual. Documentation included like passports, IDs, driver license, which are certified true copies. So this client verification process. So once the verification process is completed, the client will be subjected to screening to see whether there's any link to any known sanctions, PEPs, or maybe just adverse news in general, right? Through the usage of compliance databases. So after all this is done, we then have a risk assessment, right? So we collate all the information, all the findings to determine whether the client is considered high, medium, or low risk, right? So the risk level will dictate, generally how much work should be done, right, in terms of simplified standard or enhanced due diligence. Of course, I'm not going to, go into like very deep detail about what is needed. So simplified is usually the simplest form, right? The least amount of work done, provided the client is not high risk. On the other hand, enhanced is a situation where the client is considered high risk. Perhaps there's a P associated with a PEP, or maybe from a country that is considered high risk. So, typically more effort is undertaken. Say you spend more time to look at their source of wealth, right? So this represents the due diligence process. And lastly, periodic due diligence, where we do ongoing monitoring of the client's like for example, things like suspicious transactions, whether there's any weird behavior, if there's any document which is perhaps expired or going to expire, they should be refreshed, right? So this is a review of the entire CDD process, essentially, the six key steps. Now, I think a very important concept to talk about is the three lines of defense, where we're doing CDD, because this is related to governance, right? So generally, when we talk about instituting certain type of controls or in risk management, there's this concept of the three lines of defense, which determines the governance structure. Now, the responsibility for CDD checks does not just lie with generally the compliance function. So the three line of defense concept is explaining or setting out a structure in which the entire company as well as an independent function will come together to make sure that AML risk is addressed. So the first line of defense, we are always generally talking about front office employees, right? So the front office employees are the ones, for example, your investment team or your investor relations team. These are the ones who have first point of contact with investors and clients, they need to understand what ML and TF risks are, in order to be able to do an initial assessment of the customers that they meet or the investors that they meet. They need to be alert to signs of suspicious behavior. What are the telltale signs of potential ML risks? So because front line office are the ones who typically meet more people and talk to them, so they need to have a certain level of proficiency, I would say, when it comes to identifying such various high risk signs. So that's the first line. Now, of course, after the firm decides to say onboard a client, that's where the second line of defense comes in, right? So the compliance function will do more of the heavy lifting, reviewing documents, complying with requirements, perform CDD checks of customers, understanding their background, request for information like passports, ID, etc. Complete the screening, and they will identify the risks associated with these customers based on this background understanding. And if necessary, make sure that the extent of CDD checks are commensurate with the risk profile of the customer. In other words, they will determine whether simplified, due diligence is justified, or perhaps there's a need to do more, say enhance due diligence, and get additional approval before onboarding the client. So the third line, independent audit function. So this third line of defense, is an independent function that aims to give a non-biased view of how effective the AML process is working, right? So the objective is to assess effectiveness of the internal AML CFT program that has been put in place by the directors and senior management and is completed primarily by the second line of defense, the compliance function. So through this independent review, the objective is also to identify weaknesses and provide recommendations to reach any key gaps or key weaknesses, right? So we want to continuously improve this process, and that's why the third line of defense also plays a very important role, right? It can be difficult for compliance, right, who are conducting this process to give an unbiased view of themselves as to how good the function is being carried out. So that's the role of the third line of defense, right? Okay, so we briefly talked about CDD checks, like three lines of defense, and so I just want to touch on a bit on the recent publications by the MAS. So the first one is Circular MLD 12/2024, Audit of AML CFT Policies, Procedures and Control. So on 21st October, the MAS issued a circular to remind financial institutions. They basically emphasize the importance of maintaining an audit function to provide independent and regular assessment of AML policies and procedures, right? So there's no requirement for an audit function to be in-house. It can be outsourced, right? So as long as even an in-house function can be considered independent. For example, in the case of for a group company that has global resources, there's an independent audit team. This audit team, is able to conduct an independent audit, right? So that will work. Or of course, if the firm hires an external party to do this review, then that is also definitely considered independent as well. So there are five main key points emphasized in this circular, right? First of all, expertise. Now, the audit function is competent and sufficiently resourced. Now, obviously, the MAS doesn't explain what it means by competent and sufficiently resourced, but this generally means that the FI also needs to understand if the firm that's carrying out the audit has relevant competency, right? Has a big enough team, whether they are maybe established in Singapore for a long period of time, where they understand and have the expertise to do to carry out the audits effectively, right? So a compliance service provider like Waystone and of course, other audit firms generally, we have the resources and the competency to do this review. So the second one is prioritization. Uh, Again, a risk-based approach, right? The audit scope should be commensurate with size and nature of the business. If the firm has, a high number of clients, where, for example, high number of clients where there's a lot of, redemption and subscription activity, so perhaps a more in-depth review, a more stringent review can be done. For example, we do a lot more sample testing as opposed to another firm which might have more institutional grade clients, which are considered low risk AML themselves, then perhaps the approach and the extent of work can be scaled down. So prioritization. Now this really depends on the differences or case by case basis, depending on how big and what the nature of the business of each client, right? So the term is regular assessment, not directly related to audits, but uh, regular AML risk assessment should be done to capture changes in profile. So kind of re-emphasizing that the firm needs to periodically review its EWRA because the EWRA is a self-assessment of the firm's AML risk in its entirety, right? So regular checks, regular assessments should be done, especially when there are perhaps changes in business. Maybe the firm onboards, tries a different strategy, launches a new fund, goes to invest in a different location. So these are some changes which can change the AML profile. So fourth, data analytics. Now, this is not, obviously it's not mandatory, but if there is an opportunity to utilize data analytics when conducting audits, right, it might be possible to do so, but it's generally restricted to firms which we are bigger, have more clients, where data analytics can be used to identify key risks for audit, right? So it's not always applicable. And the last one, last but not least, best practice guidance. Taking reference from best practice guidance. So the anti-money laundering audit peer group best practice paper was published by the MAS. So it focuses primarily on banking controls. So, but again, a lot of concepts of onboarding and KYC, they are quite similar in a sense. So, there can be, firms should also take a look at the best practice paper and see if there's any guidance which might be relevant. So I think all in all, the MAS is emphasizing that there should be a robust internal program and there should be also independent audit done to assess the effectiveness of this internal AML program. Okay, and we move on to the next information paper, AML supervisory expectations from recent inspections. So from time to time, the MAS will do inspections. Now, this is a random process. They don't really publicize this. If the firm is selected for inspection, so they will reach out to the firm, to explain the requirements and conduct this review. So the information paper contains the observations as well as the best practices. So it's kind of like a set of recommendations or best practices that other FIs can take reference and to see if they need to improve any aspects of their internal process. So if you look at this particular information paper, it covers several areas. Five key areas: assessment of customer risk, how the customer risk is assessed, like what factors to consider after assessing the customer as high, medium, low, then how would the ongoing process address this difference in risk levels, right? And the second one is identification of material red flags. When onboarding a client, what are some material red flags or things that can suggest that there's high AML risk involved. So Essentially, this covers that process. It's closely related to assessing customer risk. Okay, source of wealth establishment. It has been mentioned a few times already. Particularly important for higher risk clients because we need to assess the entire body of wealth, how they came about to become an accredited investor, for example, right? Because the source of wealth essentially determines where the money came from, right? How did this person earn his wealth? I mean, there's a related concept is also source of funds, but you know, source of funds refers to the money that this person prepared to be invested, right, with the FI or into the fund. But source of wealth basically talks about the entire body of wealth that this person earned. So the focus is on source of wealth. And we have risk mitigation measures like if say for example the FI decides to go ahead and onboard a client. So what do we do? Right? How do we mitigate this potential risk? And lastly is holistic monitoring of accounts, generally applicable if, say, a client has multiple accounts or maybe even, multiple accounts within the same organization. So there can be some form of monitoring just to make sure that all the connected accounts, they are the risks associated with these connected accounts are addressed, right? So we just go into a bit of detail on each particular section here. Okay, the first one, under the information paper, so we're talking about assessment of customer risk, in which some of the observations are, so they note that FIs should take reasonable efforts to obtain and verify past and present information about a customer. So when it comes to customer risk, because there have been instances of some clients who have name changes, right? So this can add to the risk of the client because any records related to a previous identity may not be verified or may not be verified. So any risk could be masked here, right? So FI should take reasonable efforts to obtain and verify past and present information about this customer, especially if there's a change in identity and nationality. So a good practice observed with some specifically in the inspection is that customers were required to declare all nationalities. And of course, then they went ahead and performed additional due diligence to verify the legitimacy of these multiple nationalities held by customers. So this practice are some good practice that is recommended by the MAS when it comes to assessment of customer risk. In the second area, we have identification of material red flags. Uh, general requirement is that there should be a clear policy, clear guidance for staff to identify and report material red flags, right? To make sure that they are aware, the person, doing the AML checks, they are aware of their roles and responsibilities. Now, in general, forensic analysis of documents are not required, but staff should be trained to look out for anomalies that might be present on certain documents, because whilst technology can be leveraged to kind of enhance detection of potentially fraudulent or tampered documents, these are generally not required because it may not always be possible, to hire a firm to start to conduct forensic analysis. So staff should be aware of potential red flags where documentation is concerned because we only need to take reasonable efforts to verify the authenticity of documents. So if something looks really weird, like looks out of place, looks very different from what other people are submitting, like for example, the passport photo looks like it's being photoshopped, for example. So this is a clear material red flag. And there should be guidance for staff uh, in order for them to familiarize themselves with this process. So some of the good practices noted is that there were material discrepancies in certain documents, and then additional checks were carried out. So upon the conclusion of some of these investigations, the firm also filed suspicious transaction reports. So these are some of the good practices noted in this information paper. So the third aspect, source of wealth establishment. In fact, the AMS has been emphasizing source of wealth, for quite some time. When they released the circular on source of wealth, the expectation is that FIs will obtain information on the AI or the investors' entire body of wealth, and then focus on any aspects which is considered higher risk. If the client is higher risk, maybe perhaps they are PEP, or this is a private banking and wealth management relationship client, perhaps a more robust process should be implemented. Because, as opposed to say a fund management company which after the funds are invested, there's a lock-in period. There's more risk associated with like private banking and wealth management clients. So there should be a baseline information and supplementary documents to establish source of wealth of the client. Essentially, how did this client make this, make his entire body or his or her entire body of wealth? There should be proper documentation and make a reasonable assessment of the source of wealth, right? So a good practice that was noted in which an FI conducted additional checks to corroborate source of wealth because the client declared it as a gift from a third party, right? So part of this body of wealth was intended to be invested with the FI. So the financial institution went one step ahead to verify, the source of these gifts and obtain more information. Okay, next we have risk mitigation measures. So risk mitigation measures deals with it's closely related to risk levels, right? So if you have clients who are rated high, medium, or low risk, you should establish adequate risk mitigation measures when, say, there are suspicious transactions. You should exercise close oversight of business relations with customers. Uh, Depending on what are the risks involved, there could be enhanced monitoring, there could be suspension of services, freezing of accounts, or maybe even imposing transaction limits on, say, a client that's wishing to redeem or subscribe, right? So a good practice that was observed by the MAS is there was enhanced monitoring of high risk accounts. After the FI onboarded a higher risk investor, there was enhanced monitoring, more screening. They look closely at transactions to determine whether these transactions were of a reasonable nature, and they also impose transaction limits to basically manage to limit the risk in this regard. So these are some of the expected risk mitigation measures and good practices observed by the MAS. And the last one from the information paper on supervisory expectations. So now this is more of a generally applicable when for bigger firms. So holistic monitoring of accounts. So it involves the monitoring of accounts generally across different business units, right? Uh, Probably more applicable for bigger FIs, maybe even a bank where it's possible for clients to have multiple accounts. So appropriate measures should be taken to mitigate risk. For example, suspicious transactions reporting and enhanced monitoring. So not applicable to everybody, essentially. Okay, so uh, now we've gone through an overview of regulatory developments. I think the conclusion is quite clear that the MAS is very focused on ML, AML, anti-money laundering and terrorism financing controls, right? It's evidenced by the updates in regulations, the enforcement actions that we have seen so far. So obviously we are here, we soon we are here, we are in a position to help you comply with these requirements. So the first part is there's emphasis on audit. So this is the scope of our AML audit and review services. We're able to look at your governance and oversight. structure as a whole by reviewing the structure of your AML governance framework. So this sets out, the roles and responsibilities of the board of directors, your senior management. We provide an opinion of, we give you feedback on whether your AML policies and procedures comply with the latest requirements, right? Whether there's any areas for improvement, things that you need to enhance and put in place, right? Because governance and oversight is, it represents the roles and represents the roles and responsibilities of the board of directors and senior management as a whole. So it's important to get that right. The second bit is risk assessment. Um, in order to assist the firm to do a proper risk assessment, so we need to determine if your methodology is aligned with the latest regulatory requirements from the MAS, as well as key hot topics, key issues, like for example, any risks associated with new products, customers, delivery channels, and in particular, since the MAS has been emphasizing on risk assessment, they released the national risk assessment reports, etc. So there's a lot of literature and documentation in this regard. So we assist to look at your risk assessment to determine if it's robust, right? And whether it covers all the key material requirements. And we then, assist to provide some recommendations as well. So that's on risk assessment. So the third part, due diligence process. We went through briefly the CDD process, right? So it's pretty much a heavy lifting process where the compliance officer has to um, look at actual documentation, right? Collect information from clients, starting with identification of the structure, who is the client, collect these documents, look at it and assess whether there's any risk, right? Following the completion of this verification process, we also have ongoing monitoring, right? What are the steps that we can take to monitor for suspicious transaction, weird behavior, any factors that may suggest higher risk, right? So we are able to assist and go through this entire CDD process again to see whether there are any gaps, areas for further improvement. The fourth component, transaction monitoring and suspicious activity reporting. Um, yeah, this is related to, well, the process of ongoing monitoring. So there's a bit of overlap here. Now, so we will review your transaction monitoring framework, right? So we try to understand what are the key factors which might be relevant for your business. How is the process for escalation and reporting on suspicious transactions done? Whether there are any suspicious transaction reports? What are the factors you consider suspicious, perhaps, right? In relation to the business model and perhaps the investment strategy that the firm is running. So this is important also, obviously, because the firm has a duty to report suspicious transactions if there is any. So it's important to get this framework right and to make sure that any potential suspicious transactions are evaluated and documented. Okay, on the fifth aspect, part of a very important aspect is actually review the AML training program because the AMS does have a requirement that employees do undergo regular AML training, new and existing employees. So we will review the documentation to ascertain employees have undergone training, as well as the content of the training should also meet regulatory requirements. The whole idea is perhaps not to make employees an expert in AML, right? But at the very least, raise awareness so that each individual, so all different individuals within the organization, they understand what is their role, I would say. The record keeping, for AML, in general, there's very stringent record keeping requirements because the after checks are completed, there's a need to verify that all these CDD, KYC transaction records are retained, right? In order to evidence that these checks were done. So there will also be associated policies on, record retention and uh, documents relating to CDD checks like copies of passport, organization structure, shareholding charts, etc. So this need to be properly kept. What's the requirement is that firms have access to these completed CDD checks as and when required. And the last part is the enterprise-wide risk assessment process, right? So this is related to risk assessment in a way, but this actually deals with the firm's enterprise-wide AML risk, right? Like for example, how susceptible is the firm to AML, which clients are from high-risk countries, whether the firm is associated with PEBs, etc. So this is an overview for the firm. It's meant to be completed every 2 years, and uh, EWRA needs to be reviewed and approved by the board and senior management. And of course, to make sure that Singapore's national risk assessment reports are incorporated inside the latest EWRA. Okay, so these are, generally for AML audit and review, these are the key areas that we are able to assist. And last but not least, so we also, are able to help in other aspects aside from like AML audits, right? So pretty much every other aspect, like assisting in developing comprehensive risk assessments, right, to meet your EWI obligations, perhaps. And this is also, we can also do this as part of your CDD checks, right? Like to assist you with your risk assessment framework if you want to conduct a risk assessment on a potential client, perhaps. The second aspect, aside from a in-depth audit, we can also do health checks, gap analysis of various aspects, for example, policies, right? If you think that you just want to update the policy, right, because it's been quite some time, since it's been updated, we can do that as well. Number three, or we can also develop policies. We can help you to update and make sure that these meet, regulatory requirements. And the last one, training. So we do assist clients with AML, CFT training for employees for you to meet regulatory requirements. We go through the key, regulatory updates and developments, like just like what we did now. I mean, similar. Um, Again, it's to primarily to raise awareness, and to provide some details of, what kind of checks are really needed. Okay, so that is pretty much what we have, in mind today. Just an overview of what are the regulatory developments, what is the MAS stance, given the fact that the MAS is reminding FIs to chew by issuing these circulars. So, maybe if this is something that you have in mind, something that you need, please feel free to reach out to us. So thank you for joining us today.